Recently, the US announced a 9.1% inflation rate, and central banks around the world are increasing the interest rate to cope with this rising inflation rate and costs around the world. And the Malaysian Central Bank, or Bank Negara, has increased interest rate 2 times this year. Hi everyone and welcome back to my channel. My name is Ian Fan from Property Fund, and I talk about real estate, investment and home tips. And I appreciate if you can like this video and subscribe to my channel to stay tuned for more. So in March they increased by 25 basis points, and then in July they also increased by another 25 basis points. So currently it is at 2.25% interest rate. So what does this mean for savers and loaners? If you have money saved in the bank and a fixed deposit, you'll see that your interest rate in your fixed deposit, the returns have increased. But if you have a loan with a bank, whether it's a housing loan, personal loan or credit card, you see that your monthly commitment, the interest rate has increased. So often we think of interest rate as a way to counter inflation, but interest rate is also another way to attract investors to invest in a country. And I always thought that interest rate is something like a double-edged sword where it cuts on both sides. But instead, interest rate as a tool, it is like a sako batu. If you watch Samurai X, a sako batu is a sword that is sharp on one edge and blunt on the other edge. So it can kill on one side and it can save on the other side. So it'll be interesting to see how interest rate move forward in the coming 6 months and for the rest of the year. While Malaysia already had an OPR meeting earlier in July this month, the US Fed will be meeting in 26 to 27 July later. And then Malaysia's Bank Negara will be meeting again on the 6th and 7th of September, and the US Fed will be meeting again on the 20th to 21st September. So before the 9.1% inflation rate was announced, a few banks were speculating that the Fed will increase the interest rate by another 75 basis points at most, or maybe at 50 basis points. So let's look here at the chart. We'll compare the interest rate and then the exchange rate, and then how much if an investor invests $1 and what is the return compared to investing in US and Malaysia. So in 2020, the US exchange rate was an all-time low of 0.25%. While in Malaysia it was at 3%, and this was during the pandemic. And the exchange rate was at 4 ringgit for every $1. And then in March 2021, the US increased their interest rate by 25 basis points to 0.5%, while Malaysia decreased their interest rate to 1.75% OPR, or the overnight policy rate. But then the exchange rate was decreasing, and it was at 4.10 for every $1. And then in May last year, the US increased the interest rate again by another 50 basis points to 1%, while Malaysia maintained their interest rate, and the exchange rate also was still trading at about 4.10 ringgit for every $1. And then with the rising inflation rate from earlier this year until recently in June, the US increased the interest rate by 75 basis points, which has been the most since about 40 years. So the US interest rate currently is at 1.75% before the upcoming Fed meeting in July later. And Malaysia increased the interest rate to 2.25%, but the exchange rate has decreased to 4.40 for every $1. So if we look here at the chart, the returns, if the investor invests in Malaysia here, we still have a very positive return at 2020 at 11 cents return compared to investing in the US. And then even in 2021, as US increased the interest rate, if an investor invested in Malaysia, the interest rate return, the margin still have about 5 to 3 cents for every $1 invested in Malaysia because of the decreasing interest rate. But even though with a decreasing exchange rate, but with a rising interest rate, you see that the returns start to take a difference. So if the US Fed increased the interest rate by 1 basis point at most, or 75 basis point, you see a difference of 2 to 1 cent return if the US investor maintains the investment in US compared to investing in Malaysia. So this is what I think can happen moving forward if Bank Negara does not comparatively increase the interest rate to the US interest rate. We'll potentially see more net outflows of funds and money from Malaysia back to US or other country with better interest rate. So leave your comments below on finance and interest rate. And once again, thanks for watching, and I appreciate if you can like this video and subscribe to my channel.